Yesterday, in the first half of the day, the euro's bullish run was limited by downbeat data on economic sentiment in the euro area and Germany. Later on, Eurostat confirmed its early estimate that gross domestic product in the bloc rose by 1.3% year-on-year in the first quarter and said that employment grew slightly. However, these reports failed to support the European currency. In the second half of the day, the euro came under pressure from a stronger dollar amid upbeat statistics on US retail sales for April. Although the Fed intends to pause interest rate hikes, market participants anticipate the regulator lifting rates by another 25 basis points at the next meeting. Moreover, some Fed members have noted that this week that there is no point in pausing rate increases when the economy shows resilience, even despite banking sector turmoil. Against this background, the greenback remains in demand. Given that the issue of the US government debt is still unresolved, risk assets will hardly gain strong upside momentum. Besides, yesterday's speech by ECB President Christine Lagarde went unheeded, which enabled bears to retain control of the euro. The British pound also slid, weighed down by gloomy data from the UK. Britain's unemployment rate unexpectedly rose to 3.9% in the 3 months to March. The number of people filing claims for unemployment benefits in the UK also increased. As a result, the pound sterling ended down on Tuesday. Currently, it seems to be ready to extend its downward correction. Before we get into technical analysis, let's take a look at today's macroeconomic calendar. The euro area is set to report data on consumer prices. Eurozone annual inflation is expected to be 7.0% in April 2023, up from 6.9% in March. Core inflation, which excludes volatile food and energy prices, is forecast to stand at 5.6% in April, compared to 5.7% a month earlier. If the indicators rise, the European Central Bank will most likely continue raising interest rates until at least the fall. Even if the core index declines, the ECB is unlikely to give up its plans. Thus, the market situation will hardly change fundamentally after the release of these reports. Traders may also take notice of speeches by ECB, Fed, and Bank of England officials. Furthermore, it's worth paying attention to data on US building permits and housing starts. Notably, the state of the housing market has a dramatic impact on the economic outlook. If the indicators decrease, it will signal that the US is sliding into a recession, whereas upbeat housing market figures will allow the Fed to keep monetary policy tight, which in turn may back up the dollar. And now let's move on to the technical analysis of the euro-dollar pair on the 1-hour chart. After the release of Eurozone inflation data, bears are likely to take the lead. A false breakout at 1.0873 will create a strong sell signal. In this case, the euro will hit a new one-month low approaching 1.0833 and probably 1.0790. At the level of 1.0790, I recommend going long on a rebound, counting on an intraday correction of 30-35 pips. Long positions at 1.0833 can be considered only amid a false breakout. If bulls regain control of 1.0873 and the price consolidates above this level, the euro will have a chance of rising to 1.0912, the high of its correction cycle. At this mark, it will be possible to go short. Besides, short positions on a rebound will be relevant at 1.0948 in the hope of an intraday correction of 25-30 pips. Speaking of the British pound, it is worth focusing on the nearest support level of 1.2467. At this mark, bulls are expected to push the price up. If there are no strong gains following a false breakout, I will close long positions and wait for a decline to 1.2436. At this level, traders are recommended to buy the pair amid a false breakout. Long positions on a rebound can be considered at 1.2387. If the price breaks through 1.2467, fixes below this level and tests it from the bottom up, the market will see another sell-off with the pound sterling dipping to 1.2436 and probably 1.2387. Short positions amid a rise can be opened only amid a false breakout at 1.2500 or on a rebound at 1.2533, the upper boundary of the sideways channel, counting on an intraday correction of 25-30 pips. Best of luck!